Hello and welcome to another episode of the Odd Lots podcast. I'm Tracy Alloway.
And I'm Joe Weisenthal.
Joe, do you remember that time I bought a barrel of oil?
That was a classic moment in that was classic.
You can say it in all of financial journalism.
In all of financial journalism where you actually acquire. It wasn't a barrel though.
No, it wasn't.
Let's be honest here. Let's be honest.
It wasn't. I tried to buy an actual barrel.
It was like a gallon, right?
It was basically a jar of crude oil. I'm really happy I didn't buy an entire barrel in the end, because part of the experience of doing this was I realized how difficult it is to actually move and store oil. Oil is a dangerous thing.
Yeah, you had it on the desk next to us, and then you left, right? Like you left for Hong Kong or you left for Abu Dhabi and left the oil, and like a bunch evaporated.
I'm not sure I should tell this story, but I couldn't figure out how to dispose of my jar of crude oil, so I just procrastinated and left it on the desk, and it slowly evaporated and poisoned my colleagues.
We all inhaled oil fumes for months and months and months on end.
Sorry about that, Joe.
It's all right. I survived.
All right. Well, I bring it up because I'm very, very curious about the business of storing and transporting oil right now. And part of the reason is because, as we've been discussing on this podcast, we had a really great episode with our colleague Javier Blas, for instance. U.S. oil production is at a record. I think it's like more than 13 million barrels per day now.
Yeah, it's really extraordinary. Obviously, the U.S. just production booming like crazy. And, you mentioned that episode with Javier. When we talk about oil most of the time, right, we're talking sort of like macro, like who are the big producers? How much global demand is there? What is the trajectory? What's happening in shale? What is happening in Saudi, et cetera? But as we like to do from time to time, like these aren't just numbers on a screen.
Right.
Oil is definitely not just a number on a screen. And if you want to go long oil, if you're bullish on oil, like you might be able to do that with a few clicks, but someone somewhere.
You don't want to take physical delivery.
You probably don't want to, but someone somewhere has to have the physical, I don't know if it's counterpart or the physical exposure to meet your financial obligation. So if you trade oil futures, someone there, like I assume, takes the other side on some level by having exposure to the physical product, which means worrying about disposal, delivery, storage tankers, and so forth. And so like the sort of the side of the business that's not usually talked about, we should talk about.
Absolutely. And just going back to that episode with Javier, I remember one of the themes from that was how much oil production patterns have changed in the past few years. And so I'm very curious if the storage and transportation patterns are also changing. So I'm pleased to say we really do have the perfect guest to dive into the business of storing and moving oil. We're going to be speaking with Steven Barsamian. He is COO at the Tank Tiger and also the co-host of the Tank Talk podcast, so a fellow podcaster. Steve, thank you so much for coming on Odd Lots.
Thanks, Tracy. Thanks for having me. Thanks for having me, Joe.
Maybe just to begin with, talk to us about what the Tank Tiger actually does. I was looking at the website. You describe yourself as a clearinghouse for terminal storage. And if you go to the website, Joe, I don't know if you've done this yet.
I have.
But you can look at basically kind of want ads for storage. It's like looking for, specialty chemical storage, this amount, or I have available this amount of storage for a particular product.
Yeah, I mean, Tracy, you kind of nailed it there. That's kind of what we do. I like to say we're Airbnb for tanks.
I was going to say Tinder for tanks, but Airbnb probably works too.
My dad has used Match.com before. So,
okay.
That's kind of high level what we do. Essentially, we have customers that are terminals that store, petroleum products, chemicals, bioproducts, and they're all pretty much liquids, and they go into a giant tank. I'm sure people have seen The Sopranos, the intro to The Sopranos, those ginormous tanks in the intro that typically holds, gasoline or diesel. And essentially you can lease them out like an apartment, and people pay for a term on that tank like you would pay for a term on an apartment. And essentially oil traders, oil majors, they usually are the customers that lease those tanks. And there's terminal storage companies that are public companies that kind of lease them out third party. So that's kind of how it works. And essentially we kind of get in the middle of that and we try to facilitate the transactions of people that need storage and the people that have storage. And like you said, it's kind of like want ads, trying to find the perfect match. And really that's what we've done for the past 9 years. And so far we're still in business and still paying the bills. So
wanted storage unit with sensitivity and I don't know, affinity for poetry.
Okay.
That's slightly random.
How much of the business, if you look overall, is sort of like big, sort of long-term relationships between some oil producer and some storage company? And then how much maybe of the Tank Tiger's business or anyone else's business is perhaps like sort of like, I don't know, maybe the term is odd lots of oil storage, where some storage company has a little bit of extra space beyond what their contract is. I mean, I assume there are like long-term contracts, but why don't you like talk about the breakdown there of how these deals usually come together?
So my dad, who started the company, he worked at Hess for over 30 years, and he kind of started the third-party leasing of terminal storage at Hess. Those terminals are now not obviously owned by Hess anymore. And he kind of saw this need in the market to create this company. And, when he was doing deals at Hess, it was, largely long-term deals or spot deals, and essentially, trying to find the best fit for their excess capacity and assets. So I would say, typically today, with us being in the market, we've kind of added some liquidity and transparency. A lot of the big players, there's big and small terminals, and a lot of them have, like you said, long-term customers that have been there for years and years. And then there's swings in the market where there's contango, which I hope your folks know what that is. It's basically in the futures market when the price is more than today's price. So essentially you can put oil away and make money by storing it. And then backwardation is the opposite. So that's de-incentivizes storage. So that kind of fluctuates, and, people leave and enter markets all the time. Companies change all the time. So leases run off. So that kind of leaves that excess and incremental storage capacity that's, up for a spot or a long-term lease.
I was just going to ask one quick question. This comes up in a lot of the episodes we do on trucking, where we look at the rates and they say, okay, there's a spot rate and a contract rate for trucking. Is there basically an equivalent where you could sort of plot over time what sort of contracted rates there are for long-term relationships, and then like a spot rate that fluctuates both up and down relative to the contract?
Yeah, definitely. I mean, you kind of hit the nail on the head there. Long-term rates, they're kind of steady at a certain threshold, and it has to make sense for both sides. And there's spot rates, and that kind of moves kind of with the markets. And that's, exactly it.
All right.
So I know some oil majors obviously have their own storage, but a lot of people are clearly leasing it from third parties. Why is that? Like, why not just build out your own capacity?
Some do, but it's kind of like, the old economics model that I remember from an episode of The Office. Usually, you don't want the liability, and you have to essentially use that tank all the time if you're going to be building it. That's really what leasing comes in, is you don't have that general liability of operating a terminal, so you just can come in and go as you please when you need it and when you don't need it. Most oil majors do own their own storage for their own operational use. I would say a lot of oil majors now these days are trading, physical trading, and they will take advantage of arbitrage opportunities by leasing storage in certain markets, whether that's for blending or moving product from A to B, or taking advantage of contango, as I mentioned. So they kind of do both. And there's oil trading companies that exist that are just these companies that trade commodities from all different parts of the globe, and basically they operate with long-term and short-term leases to take advantage of the same trading opportunities as I kind of just mentioned.
You mentioned those tanks in the opening scenes of The Sopranos. My assumption would be that in suburban New Jersey or suburban New York or wherever they are, there's probably not a lot of appetite to build more. That there are neighbors who probably do not want those big fields or those big terminals or the big storage facilities to continue to expand. I imagine people don't want to live next to them. Whereas on the production side, I imagine in sort of depopulated parts of like North Dakota or Texas or wherever there's explosion, there's probably not much of less of a constraint. So is there a mismatch in the country's ability to produce oil, which seems like it can ramp up like crazy, versus the country's ability to store oil, which I imagine, especially in strategic locations near ports, near where people live, is going to be somewhat constrained?
For sure, Joe. I mean, all of us live kind of in the New York area. And New York Harbor is the NYMEX hub for gasoline and diesel. And we have, I don't know if people have noticed, but there's a giant bunch of tanks farms in the area. And really, that kind of has actually constrained over the years. A lot of terminals have been sold and turned into warehouses. And like you mentioned, NIMBY, nobody wants to see, an oil tank pop up in their backyard.
Yeah.
So a lot of that is actually kind of constraining here in this geography. Whereas you mentioned other parts of the U.S. and the globe, they're probably more willing and there's nothing around them to build more tanks. Building tanks, I mean, it kind of fluctuates with the market, as I said before. We started the podcast with production growth. That was a big boom in midstream in the early parts of the 2010s with the fracking, and kind of midstream followed along with that to facilitate the movement of that production. And that was kind of the big midstream boom there. And then, recently with the opening of the Mexican border, there was a big boom for midstream needs to move product to Mexico, whether it was by rail. So
sorry, the tanks are midstream.
Midstream tanks.
Okay,
Sorry.
No, I'm just making sure. But that tanks are considered midstream.
Midstream,
Okay,
yes.
okay,
Yeah,
okay.
midstream terminals, yes. It's kind of all midstream includes, pipelines, tanks, etc. So yeah, there's downstream, midstream, and upstream.
Yeah.
So you had, the big boom for Mexico. There was a lot of tanks built for that movement of product to Mexico, that all these companies were able to do business in Mexico. So that provided the opportunity to expand and build more tanks for that. And then recently we've seen on the chemical side and on the agricultural side, which kind of leads into renewable fuels, we've seen quite a large movement to build more tanks for housing renewable fuels. And, that's not a coincidence. There's been, a global push to get into renewables. When I say renewable fuels, that's, biodiesel, that's ethanol, that's renewable diesel, this product called SAF that's meant for airlines. It's a replacement fuel for jet fuel. And then, there's the feedstocks that are used to produce these products. And those are typically like palm oils, veg oils, used cooking oil. All this product is need to be imported and then moved to the production facility. So that's kind of facilitated this kind of new boom in midstream and terminal infrastructure of building more tanks for that. And that's largely, we've seen it largely across the U.S. and it's predominantly happened in the Gulf Coast too, where I would say the Gulf Coast is one of the largest holders of tanks inventory in probably the U.S. and just sheer total capacity. It's definitely the most active and the largest.
There used to be headlines about the U.S. running out of oil storage. I think during the depths of the pandemic in 2020, we started to see those crop up. But even before then, I think during the shale boom, there was storage concerns and like the pipelines were getting clogged up and things like that. Do those concerns still exist today? If U.S. oil production is at more than 13 million barrels per day, we've seen this massive surge. Is the infrastructure to handle the movement and storage of that where it needs to be?
Yeah, actually, we kind of overbuilt our pipeline capacity a little bit in anticipation of all this production and needing it to pretty much any incremental barrel we produce is exported. Because, we've kind of satiated our need with the refining capacity here in the U.S. for light crudes. So, yeah, we kind of overbuilt it a little bit, and the production is trying to keep up to get to that point where levels are paying for that infrastructure that was built. Yeah, kind of the things you mentioned, for your prior point with the, it was around like 2015 when oil kind of cratered, and oil typically does boom and bust cycles, as everybody says, and that was a bust cycle in 2015 with all that production. And yeah, pretty much everybody that had a tank was filled during that time period. And then we have the pandemic, which was more on the demand side, where there was no demand for oil, so people had to park at every nook and cranny. I mean, that might have been the craziest 2 months of my life during that
What
period.
did you see? Did you see creative storage solutions?
Yeah, talk about that time.
Yeah, no, it really was pretty wild. I'm not going to lie. It was unprecedented for so many reasons for so many people. And yeah, we did see so many unusual things, which probably won't be replicated. We had people parking frac tanks, which are these small, like portable tanks and filling them with oil next to, Cushing, which is, the NYMEX hub for WTI. And for futures contract, that's the easiest place to trade oil. So, yeah, we were seeing that kind of weird level of detail of, filling up and moving frac tanks to Cushing, people filling up pipelines and not even moving the oil. It was a very, very strange time. And, typically it's more of a flatter market than that. And we were seeing another weird thing, people booking vessels and just parking oil on large vessels and parking them at sea or near ports. I'm trying to think. Oil on rail cars. That was another thing. People were parking on rail cars and parking them in rail yards. So, yeah, that was an interesting time, not going to lie. I was doing a lot of work in a very short period of time, and also being in a lockdown was making it weirder. But
what is the economic sweet spot for owners of midstream assets? Because obviously, we could talk about oil in terms of volume, or we could talk about oil in terms of price, and sometimes they move in the same direction, sometimes not. Often they move, I guess intuitively, often they move in opposite directions. What is the sort of like the dream business environment if you're in the midstream space?
Probably the dream is high oil prices and high contango. That's pretty much, the dream.
So high oil prices, but even higher in the future.
Yeah, exactly.
Got it.
I would say that's probably the dream scenario. Typically that doesn't happen. But yeah, that would be the dream scenario. I mean, then you have, producers still producing, moving the oil, which, they're paying tariffs for the pipeline. And then, they're paying it for the export of moving it from the pipeline to the tanks, to the dock, and onto a ship. So that's making money for the terminal all the way through. And then they're making money on the storage costs, which, people are just going to park oil in the storage and pay for it. So I would say that's a good dream scenario.
What makes for a good storage facility? And obviously, I get that the requirements are going to depend on the exact product. But in general, what are the things people are looking for when they're looking for storage capacity? Is it just price, or is it maybe safety or convenience, things like that?
So when we started the Tank Tiger, storage prices was very, very opaque. And we tried to bring a little bit of light and transparency. Like I said, we've been doing this for 8 years now, so people kind of trust us, I think. So we've been able to kind of shed some light on storage pricing. And it was a black box day. Somebody could have been paying like $2 more than the other person in that same terminal, or, vice versa. So we've been able to actually create kind of more transparency and liquidity in what we do. But to answer your question, yeah, I would say it's a combination of all. So typically in a flatter or more backwardated market or small contango market, the more what I call well-connected facilities or desirable locations are going to be, the first to, get leased out. And typically those are, terminals in Houston, those are terminals in New York Harbor, like I mentioned, in Cushing, and along the river in New Orleans. These are pretty much major trading hubs and logistical hubs. And for at least oil terminals, the better the connected, which means, the best pipeline connected facilities tend to do better than the ones that are not as well connected pipeline. And that kind of means is like they're bringing in oil from multiple locations, so it gives a person optionality, and they're bringing it to their outbound connectivities are vast and broad. So that kind of lends itself to be a favorable facility. And then, obviously price matters a lot as well. And then for logistically, it's, location. So customers that lease storage want to be around other people that lease storage, so they're able to move barrels from point A to B, and, that provides some liquidity and trading activity, so they don't want to be stuck in the middle of nowhere and nowhere to sell their barrels. And that kind of hurts a lot if they can't sell and the market's bad. So that's kind of what I would say lends to a favorable facility. And crude and products, what clean products is like gasoline and diesel jet, and crude oil, obviously it's crude oil. So they're kind of segregated in different terminals. Typically, they're different facilities handle both. So there's differentiators between those two.
I have a really basic question, since you mentioned the pipelines, but how does the oil or the product get from the pipelines into the actual storage facilities? Like, what is the mechanism?
Are we talking from a crude oil or clean products standpoint?
I guess we could do both.
Okay.
I'd be curious to hear the sort of like life cycle of both those things, from like stuff comes out of the ground and then gets moved, or stuff comes out of the ground and gets refined and then put into storage? Because I don't really understand the physical
sequencing.
process. Yeah, the sequencing of it. And do the pipelines like plug in directly into storage tanks? I can't imagine that's the case, but go ahead.
Sure. Yeah, of course. I'll start with crude because that's where it all starts. So typically they drill it out of the ground, and the way it's moved is into kind of like an aggregation site. Either they move it via a truck or a pipeline that's connected kind of close to the well, and that's moved into like an aggregation terminal. And from that aggregation terminal, a terminal that has tanks, so it's literally taken, if it's a truck that's driving it to the terminal, they'll stick a hose into the truck, it'll pump it into a tank, and then at that tank, there's multiple tanks in that little small terminal that'll pump into a bigger terminal. And that bigger facility will then inject it into a long-haul pipeline. Some of the long-haul pipelines from the Permian go to Houston or Corpus Christi for crude, Corpus for their refining complex and to export out of there, and then Houston, for their refining complex and to export out of there. So when it goes to the long-haul pipeline, typically the midstream company that owns the long-haul pipeline also owns the terminal at point A and point B, so when it's coming in and when it's going out. And then from that pipeline, it'll go into various tanks in that tank field, depending on manifolds and connections in that terminal. And that's kind of how it moves. And then, in that terminal, there's multiple pipes that are connecting each individual tank, so it can move from one point to another and one tank field to another. Certain terminals have interconnected tanks, and it's just like kind of a web inside the terminal, how the oil's moved to each location. And then from that tank, it's either transported onto a dock. So the dock is located at the terminal, it's piped into the dock, and a ship comes up and the ship is loaded and it goes off to some foreign port. Or it's moved into another pipeline that is connected generally to a refinery. And then the refinery has their own tanks at their own plant, and that they'll take from that tank into a distillation tower and start producing clean products. And then that kind of leads me to the clean products. So once a refinery produces clean products, typically we'll start from Houston because that's where a lot of refining capacity is. So a lot of these refineries have connections into some of these major terminal hubs in Houston, where a lot of gasoline blending and diesel activity happen, and they're pumped into these terminals via pipeline, and it can go trade hands from one person to another. And then it can be exported, like I mentioned before, pumped onto a dock, sent to like South America or wherever, or it can be shipped up Colonial Pipeline, which is, the largest distribution pipeline in the U.S., and that pipeline has injections at the terminal site in Houston. And then there's various stops along the way as it goes up to New York Harbor. And then once it's at its destination, let's say at a terminal here in Linden or Bayonne or wherever in New Jersey, it hits the tank, and then typically it's consumed by a customer. So you'll have a truck that comes up to the terminal. It'll load the product at the truck rack, and then it'll drive off to a gas station. So that's kind of how it works.
That was great.
Yeah, that was a really good overview.
And I have a very quick, simple question. The basic pricing, are we basically talking about a sort of barrel per day type of pricing, or how does...
storage pricing?
Yeah, storage pricing.
Yeah, so it's essentially, like you said, it's in dollars per barrel per month.
Per month, okay.
So that's a typical storage.
What's a typical price on an average market to store a barrel of oil?
It varies
quite
a bit. Petroleum products are probably slightly less expensive than chemical products in terms of pricing. And so it's just kind of
like at a dollar amount. If Tracy suddenly had a barrel of oil, which maybe she would, what would it cost her to store it for a month in a typical market?
Okay, so yeah, I'll say let's start in Houston. Gasoline components in Houston is around 90 cents to $1 a barrel. Diesel's a little bit slightly less than that. And essentially, you're paying for 1 month minimum at least. You have to pay for at least 1 month. That's the minimum a terminal will do. More desirable terminals won't even do that month. They're like, you need to take a year or so. So So you basically pay for that year, whether you use it or you don't use it. And then there's actually secondary markets where people are allowed to sublease their tanks, you sublet an apartment.
So this was going to be kind of my next question. Is there an active speculative market for storage capacity? In other words, could I say, you know what? I want to go long the cost of storing oil here, or I just want to buy a bunch of capacity and I don't know if I'm going to use it, but I think I can resell it for more 6 months from now, or I want to buy a bunch of capacity here and sell a bunch of capacity here because I think it's going to be rerutted. Like, how liquid, like, can you just sort of be like a computer warrior and trade capacity in some way?
So yeah, that's kind of a multifaceted question. So yes, trading companies will take speculative positions and lease tanks, but typically they don't do it so they can sublet it. It's typically they're anticipating some sort of market need, and you usually want it for your own use, whether it's blending or storing the oil, and that will actually make you more money than subleasing the tank, because it could be, exponential factor how much more money you can make having that tank. And yeah, there is a secondary market. I wouldn't say it's that liquid, but with us being around, it's maybe gotten more liquidity to it. And in terms of future buying of storage, so it's interesting you say that. There was a company that had futures exchanged for storage on CME, and you were able to, if you wanted to, book June storage for a certain amount price, and it would be a 1-month contract. So that contract did exist. I'm not sure if it's still on CME. I'd have to check. I don't remember offhand because they were kind of a competitor of ours. But yeah, that did it, and it was pretty innovative, and that did exist. So yes, you kind of do both.
How long can oil be stored? And the reason I ask is going back to me keeping a jar of oil on my desk and slowly poisoning my colleagues. I really didn't mean to do that, Joe.
Thank you, Tracy.
Yeah, I was surprised by how quickly it actually evaporated from this jar. And there was other weird stuff that happened. Like, for instance, the solid starts settling at the bottom, right? And so every once in a while, I remember I would pick up this jar and just kind of shake it to get it looking how it looked when I first received it. But there are all these considerations that go into actual physical storage. How long can you actually do this? And again, thinking back to the Strategic Petroleum Reserve, I always have this picture in my mind of a mountain of oil barrels like in storage somewhere, but I don't know if that's actually the case, if we have barrels of oil that are just sitting around for decades or something like that.
So yeah, I mean, you just mentioned it. Crap can go to the bottom of a tank, and that does happen naturally in all tanks. If you ever open one of those large crude oil tanks, you'll see some interesting things at the bottom of it.
Like what? Like rocks and stuff? I mean,
crude has like all types of metals and not rocks, but yeah, it's just it's a sludge and
solids.
Yeah,
you can't shake it, presumably, to get it back.
Yeah, they typically clean the bottoms every once in a while. Terminals will have to clean the bottoms of a tank to get all that crud out of there. But you can basically park crude oil in for a tank forever. I mean, it's essentially the same as leaving it in the ground. Typically, products, once it's refined, they need to be turned over and eventually consumed. Their shelf life isn't as long as crude oil. Crude oil, you can just really leave there forever. And all terminals have what I would call, so for crude oil, they have floating roofs that sit on top of the crude oil to control the vapor pressure. And then there's the bottoms of the tank. So there's actually like a little hole, a circular hole in a tank. And that's where the pipe is connected to. And actually beneath that hole, there's what called the bottoms of the tank, or the heels of the tank. And that's where all the crud is. And then on top of that is where the oil is able to pump out of the tank. So when you're leasing a tank, you're actually leasing that full capacity, even though technically that usable capacity is less than what you're paying for. So that's just kind of an industry standard.
What happens to the vapor?
When you suck oil out of the tank?
Yeah.
That's a good question. I don't even know.
Okay, we're going to have to do a whole other episode on oil vapors.
But that is sort of what I was wondering next. Has the midstream / storage industry been forced to do any changes as a result of sort of climate and other questions? I mean, obviously you hear about it in natural gas with methane leaks, et cetera, and as a particularly potent contributor to climate change. Has there been anything in your world that has to be done different business practice-wise in terms of like storage or handling or distribution in order to meet environmental guidelines?
They're changing those rules every year or so. I mean, there's a regulatory agency that, has standards for these tanks, and they look to change them based on events or to meet climate goals. And like you mentioned, so yeah, there are standard practices in place, and you need to take tanks out of service every certain number of years to get it inspected and make sure it's up to code. And yeah, essentially, there's basically bylines that terminals need to follow to keep safety procedures. And luckily, in the 8 years or 9 years that I've been doing this, there hasn't been that many incidents of terminal leaking or fires or anything like that.
So around this time last year, there was a lot of discussion of a diesel shortage in the Northeast. And it was a pretty big deal. I think the White House actually put out a statement on it at one point. How did that come to happen? How bad was it in retrospect? And why does it seem to have gone away?
Yeah, no, it's funny. Everybody lives kind of in the short term. They're like, we're running out of diesel. And then, nobody's talking about it today. It was the same thing with IMO 2020. I don't know if you guys remember that.
No.
But yeah, essentially, that I believe that was around, the war in Russia and Ukraine, and the sanctions happened, and people were not accepting Russian oil. So that, disrupts global supply chains. And there's like this natural flow of markets efficiency of moving the oil from point A to point B that kind of suffices the global demand for oil. So basically global demand stayed pretty high, and there wasn't enough supply to reach that with the sanctions. So that's kind of what led to the shortage in that time period. And that can cause spikes when there's no inventory, and say there's a, really cold winter and you need heating oil and there's none there, that like the price just keeps going up. So it's that can cause severe spikes. But when there's inventory, that kind of flattens out those spikes because it kind of smooths that process. Today, we're not really having those issues. Actually, that level was kind of historic lows for low inventory. And today now, we're building inventory on the distillate side. And it's kind of more, I would say, a normal market, as you would say. And we don't really have those issues today. And I would say that's mostly because kind of the Russian oil has gotten out and demand has, weakened a little bit for our consumption standpoint. And refiners haven't been able to adapt and produce more, heating oil and more diesel. So I think it's like a combination of factors like anything. And that kind of causes a little bit of an oversupply, and that kind of fills the tanks. And, and that's almost like a self-fulfilling prophecy. Once inventory levels build, that's what traders watch. And as they see inventory levels build, that kind of decreases the price of oil. And that actually encourages more people to park more oil. So it just kind of builds like that. So
the Northeast, especially in winter, as you mentioned, uses a lot of oil for heating. Mm-hmm. We produce a lot of oil not in the Northeast. There's some pipelines, but we can't, because of the Jones Act, we can't.
Where's our Jones Act klaxon?
Yeah, right. The air horn for every time the Jones Act comes up. But is there like a perversity, or how do you see that play out? It's like, okay, the U.S. has oil, there are tankers, there is domestic need. What is the infrastructure like for getting or not getting oil from, say, Texas to homes in the Northeast that want to heat their homes? I
mean, obviously, with the invention of fracking and natural gas, that has kind of alleviated a lot of the heating oil need, and that's kind of, helped a little bit as well. I would say the majority of the product for us in the Northeast is coming from the Gulf Coast and the refinery complexes down there, and that's
via pipeline,
via the Colonial Pipeline, yeah. And then further up north in like the New England area, they're not connected to any pipe.
Right, there's no pipeline in Vermont.
No, so they'll take diesel supplies from Europe via vessel, or they'll barge it up from New York Harbor and put it into terminals in Boston.
Barge.
Area.
So wait, that means an inland waterway from New York. So you can do pipeline from Texas to New York.
Yes.
And then via barge.
Yes.
So that way you don't have to deal with any Jones
Yeah,
Act
you don't
issues?
have to pay
because
for a
there's
Jones
not
Act
a part. Okay.
Yeah.
Barges are so underrated. I always think that whenever they come up.
Yeah, no, totally. And also just America's blessed inland waterway
Yes.
system is incredibly
Absolutely.
underrated.
Yeah, for sure. I was going to say Jones Acts, they still do exist. People still do lease them, and they will still take them. Typically, it goes to Florida. Most of the Jones Acts go from the Gulf Coast to Florida. And you'll see some that go to New England, but not as many.
So I know it's been a busy few years for the oil and commodities industry in general, but looking back, now versus 2020, what's been the big change in your business? If you could sort of, just encapsulate it for us.
Sure. Yeah. I mean, it's kind of crazy how quickly so much has changed in only 3 years. I mean, a lot of the oil majors were, crying because, oil prices were so depressed and refining margins were terrible. And now oil prices are high and refining margins are great. And a lot of these big companies are reaping in tons of profit. We've seen a lot of mergers and acquisitions on the shale production side, with a lot of independent shale producers getting gobbled up by these oil majors because shale producers are seeing good evaluations and the majors are looking to grow their drilling production, but without actually having to drill holes in the ground. They can just acquire a company. So, we're seeing a lot of that. And from refining standpoint, I mean, there's going to be new refineries built across the world, and that's going to eat away at, domestic refining capacity. From us on the midstream side, the terminal side, we've seen a lot of mergers and acquisitions as well. A few big recent buyouts happened, and that's kind of changed the hands of the names of the tanks. So same assets, different names. And that's kind of what we're seeing recently, just in the past few months. And basically what I mentioned earlier was the global demand for renewables. And that's not just talk, it's happening today. And there is definite capital expenditures being put into building plants and building terminal infrastructure to house, these renewable fuels. So it'll be interesting what the next few years hold for that. But yeah, I mean, it's constantly changing, and that's kind of what keeps me on my toes and keeps me interested in this oil game. But yeah, it's been different since 2020. A lot of things have changed.
All right, Steven Barsamian, thank you so much for coming on Odd Lots and explaining the business of storing and moving oil and its various products to us. Really appreciate it. That was fun.
Thank you for having me.
That was great.
Joe, that was a fun conversation. I enjoyed that. It brought back a lot of memories for me about that buying oil project. Yeah. And there's actually a broker who took me out on his boat to go around Arthur Kill.
That sounded really fun.
Yeah, and look at all the terminal facilities and the tankers out there and stuff. There are a few things that stuck out for me. So I was kind of surprised that we have actually built out storage infrastructure to the extent that we seem to, because it does seem like in so many other areas, the U.S. sort of struggles with building just in case capacity.
Yeah.
But for some reason, it seems to have worked out in the oil world.
That was really interesting. I was also just there were a lot of interesting things. I remember when April 2020 is when we had the negative oil
prices
one day. And I remember thinking there must be some market somewhere that is essentially the mirror image to this oil price, but we don't have a chart because there's not I don't think storage capacity data is as common as the oil price data or is as readily available. But I remember at the time thinking there must be some chart somewhere that is literally the mirror image of this, because someone with some marginal storage capacity must have seen, the amount that they can rent out their space for essentially shoot up positive 40 or something de facto like that. Because if you have this oil and you're producing so much and you run out of space, you're desperate, right?
Right.
So
that was when everyone was joking about buying oil and storing it in their bathtub.
You were ahead of the curve on owning oil ahead of that. But yeah, right? That would be the ultimate time if you had the capacity. You must have just been making a fortune.
I did think it was interesting. Steve brought up the sort of creative storage solutions that you did see at the time.
Yeah.
So for instance, just keeping your oil on rail cars or just leaving it in pipelines for storage as opposed to using them to actually move it. I wonder, crazy times.
I'm also interested, too, how I guess at some point there was a CME futures contract for capacity. And like intuitively, there's got to be like arbitrage opportunities where you're like, oh, I'm long Houston storage capacity and short Louisiana storage capacity, et cetera. But maybe those markets have yet to be fully like built out and liquid. And so,
do you think Steve will let us advertise storage capacity on his website and see if we get anyone interested?
Do you have storage capacity in your basement, Tracy?
I've got like 1 foot of desk space for if someone wants to store another jar of oil.
It sounds like an environmental headache at a minimum.
Yeah, you're right. Okay, shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Check out Steven's podcast, Tank Talk, brought to you by Tank Tiger. Follow our producers, Carmen Rodriguez at Carmen Arman, Dashiell Bennett at Dashbot, and Cale Brooks at Cale Brooks. Thank you to our producer, Moses Ondam. For more Odd Lots content, go to Bloomberg.com/oddlots, where we have transcript, a blog, and a newsletter. And you can chat with fellow listeners of the podcast in the Discord, discord.gg/oddlots. 24/7. We have an energy channel and a transportation channel, so maybe people will be talking about it in there.
And if you enjoy Odd Lots, if you want us to go on a field trip to Arthur Kill and look at all the oil storage out there, then please leave us a positive review on your favorite podcast platform. And don't forget, if you're a Bloomberg subscriber, you can connect your account and listen to all of the Odd Lots episodes ad-free. Just connect your Bloomberg subscription to Apple Podcasts. Thanks for listening.